Not long ago, Australia sat comfortably in the global top tier. Our per capita income was higher than the United Kingdom's, Germany's, Sweden's, and way above even Japan. We'd dodged the global financial crisis. We'd enjoyed more than 2 decades without a recession. The source of our affluence was not merely the China-fuelled resources boom. It was built upon the supply-side reforms of the 1980s and 1990s. The floating dollar, financial deregulation, import tariff cuts, privatisation and labour market flexibility. They created the policy architecture that allowed Australia to ride the wave of Chinese demand for iron ore, coal and gas in the 2000s. Yet this prosperity peaked in 2011 and 12, and since then it's been slipping away now for more than a decade. Labour productivity is stuck at 2016 levels. Real household incomes remain below pre-pandemic peaks. The federal budget is projected to be in deficit for a decade, with public debt pushing past the $1 trillion mark. Business investment is barely above the levels seen after the early 1990s recession, and energy prices have soared. This isn't merely a cyclical downturn, it's a structural slippage in our economic potential. Now, why has this happened? In part because our political system has turned inward. The national conversation has shifted from creating wealth to redistributing it. New theories, from modern monetary theory to the deficit myth, suggested that budget constraints were obsolete. The pandemic then unleashed unprecedented peacetime spending, which has left us with entrenched deficits and higher inflation. Even now, the fiscal ratchet is clicking upwards. Government spending has risen from around 23% of GDP in the early 2000s to 27% today. Much of this is low productivity spending, which crowds out private investment and erodes productivity growth. So, what's to be done? Australia must recommit to becoming an aspirational, enterprise-driven, high-growth nation, full of investment opportunities. And this requires 4 pillars. First, restore fiscal discipline. We must rein in government spending. But we also need credible fiscal rules akin to those that delivered budget surpluses in the late 1990s and early 2000s. Number 2, unleash housing supply. We must slash red tape, liberalise land use and incentivise construction. Third, re-energise business dynamism. From industrial relations to environmental approvals, regulatory thickets are strangling business investment. We need a root and branch review of compliance burdens, a return to enterprise bargaining and a renewed emphasis on productivity enhancing infrastructure. Finally, restore our energy advantage. Australia once enjoyed some of the world's cheapest electricity. Today, we're getting to be among the world's most expensive. We must restore reliability, embrace technology-neutral solutions, and revive our industrial competitiveness. But let me add something that goes beyond economics. Prosperity is not merely the product of good policy. It rests on cultural habits and institutional integrity, a respect for markets, a spirit of enterprise, a belief in reward for effort. We need political courage, business leadership, and above all, an engaged Australia that refuses to settle for mediocrity. If you want to learn more, read or listen to our latest research on productivity at cis.org.au, where you can also become a member and donate to our shared cause.